I'm going to take a look at this Canadian dollar. This is the 1 hour chart. And you kind of still have to be long this thing. You get some follow through here coming into Sunday. Go up another, I have 10 pip grid here, and the big black is 100 pips. And this thing can really move. The Canadian dollar is pretty vicious, and I don't know what the spread was here on the news, but right here, say you had a buy stop here, and you're long, this could have kicked you out, but it also would have been the place to think about. In the 1 hour chart, these tops and bottoms are kind of a big deal. On the half hour, that might be a kind of a triangle mess, but it definitely becomes the price. You still need at least a 10 pip stop here, but if the spread got wide here, maybe you only got this round number. So maybe the spread went to 30 pips here. And even though you see the bid price being painted on the screen here, it doesn't mean that if you I guess that's the problem I have with back testing. I had a guy and I still haven't got back to this guy that posted on a I did a where you test inside the MT4 platform. You go up and you do a strategy test, and I told the robot or the EA to give me a very tight 2 pip fixed spread, and don't ever expand on me when the news comes out. You know, it just fixed through the whole data set. So the robot, and anybody can do this robot, and you get just a beautiful equity curve. It's like 45-degree angle. You just tell the robot every time the 1 period moving average crosses over the 2 period moving average, buy. And I think it buys at the market. I think it just keeps buying. And the funny thing is that as long as that spread is 2 pips, and I think it's designed to, I'm not even sure where I put my take profit on that, but it just kind of like, it's trading its ass off. So it literally goes in at every twist and turn. So imagine a robot that just, I'm selling, I'm buying. Now here the robot might get kicked up. And this is why, you know, a lot of these robots, you'd have to turn them on and off. Of course, my dream machine that was never built because it's just too complicated, I guess, apparently, than I thought, to ask us EA to just say, you know what, when the ATR gets to 20 pips, just start putting buy and sell stops in there. And not only that if it should go to 10 pips, that the robot's going to put in even more extreme tight entries with more extreme targets. That seems to me to be the most logical bot you could possibly build. Of course, on a 15-minute chart, you're waiting for maybe 3 15-minute bars that are living inside of a 15 pip range, and then bam. Now, I've already got the stops written. So what I do when this is coming down, I just keep hitting a buy stop key, right? And kind of an anger trade, actually, because I want to see it go up. And these are stacking up. Now, I'll come back and delete these guys because they're too old and they're too shitty a price once it starts to go up, because I think we all know that what goes up must come down and what goes down must come up. Of course, some of these moves, and look at this Canadian dollar, just before this plunge, what does it do? It comes back to this bottom, so you have to have a pack of sell limits up here, and I think you probably have to hand place that, because if you just canvas an area, like if you press a button that just throws a grid out like this, which is certainly a riot. In fact, I made money on this, and this spread did not go. I could actually show you these trades on a demo that I ran a script, and just before the news came out, I hit a button and it threw in a 30 to 40 to 50 pip grid, and actually cashed out of that when the time that news came out. I didn't care whether it went up and down. I didn't have no sells in there, but I'm always looking for this kickback entry. And the funny thing about these markets is all you have to do is say at the beginning of the day here, even right here, and you could do every 10 pips on this. So if you laid a 1K, this is just, trading 101, right? For trading for people with $100 or $200, trading for dummies. At the beginning of the day, you don't know what's going to happen. and you really don't care. You don't want to have to decide. So you put sell limits up here and you put buy limits down down at the round number. But that's not good enough because they never made it down there. So you would put it at this round number and then every 10 pips all the way down, say. Because you're like, you know what, I don't want to buy here. And actually this is probably the trap trade for the people that the market makers come in, they grab all those stops, they pull it down, and these people are like, see, I told you it was going down there, like bam, and they take them to their break-even orders. That's another reason why, a lot of these robots move to break-even before, and that's why you see all these behaviors. It's not an accident that these things happen here, but just because even a robot realizes in all robots, there's nothing, this top, this bottom, this top becomes this bottom, this top becomes that bottom just for a moment here. And here you could have probably gotten filled with now granted, you are biased long on this, but you didn't have to be. You could have been biased short on that because you would have made money on this pullback. And, but if you're biased long, the script is written so that maybe you are buying on buy stops here. This gets pretty quiet, then smash. I think this is probably news or just the opening of US, and then Europe open here, and then whatever, here comes the news or whatever on it. It doesn't seem to matter, right? This is definitely news because this is probably this is coming walking down into this top. So your buy limits are sitting here, and you're like, yeah, whatever. I mean, this is kind of painful in a way because I don't know if you've ever seen this setup. You're just like, come on, can we just get there? And so that's why I usually get a little impatient and start putting in buy stops on top, going, I'm just going to load up on this fucking shit. Sorry. Can't just get so angry waiting for the setup. If you've seen so many setups, you just go, yeah, I know. Well, it's got to, yeah, and then it's going to, yeah. It's just like a setup for like anything. And this reminds me of when you're at the traffic light and you're waiting for traffic, and just because the light's green, people aren't going. They're just not, when there's too many cars, red means go and green means stop. And people behind me are all anxious, and I'm thinking to myself, if I could only have like a megaphone to tell them behind me, you don't understand. We're going to be, the people in front are just like, they're on their phone, they're writing a book. They're not sitting there. We're not all scalpers. We're not all sitting there with their finger on the trigger and like going, hey, come on, we know we're going to go down, so let's just spike down there and get it over with and then go up. And it's kind of funny with these kickback things. Are like, yeah, okay, well, the tension of everybody's like, yeah, it's going up, and then what's going to happen later on is, and who isn't looking at this double top going, man, as soon as they take out this, and look how they just trap these people by 5 pips here. And like I said, it's spread dependent. This is very precise, critical, crush through zones. And the kickback. This is the dumbest setup in the world. Buying previous double tops that become bottoms on the 1 period moving average. Couldn't get any simpler. And the bulls are just having a heyday. They're still holding this up thread here. So if you build your channel off of that, this is your known. Obviously, the first big turning point where in the middle of the day here, or wherever Europe is, you finally got your swing low pullback. You got your kickback to the fair value, kind of like the bottom third fair value of this range. You come back into it. So this is if you can wait a day for this entry, it's a premium entry on the 1 hour, and the 1 hour is 24 bars, so you have 24 chances to blow up your account. Even if you pull the trigger down, not to mention a true anger trader would, every time it's down, they'd be like, I'm buying. They wouldn't buy that up thing, but they would buy every down. So they buy here, they buy there at the market, just on the clock at the market. That's the only justification at the market, is just like, oh, it's 12 o'clock buy. And so it's 1 o'clock buy, and as soon as it goes up, stop buying, and it keeps going down your buy. So now you're into, say, 8K here. I'm just speaking of a of getting into, say, 28K on a micro account, which is plenty of K. I don't know. You can't, well, your cars are like going for 28K. So it comes back to here. And just if you never traded anything but on the clock at the market, certainly don't want to be buying when it's going up at the market unless, I don't know. Adding to a position to me just seems like, man, if you just go with what you got. You don't like if you're I hate to go back to the female analogies of women, but if you got one hot girl, you're not like gonna say, let me if I can load the wagon on this, because it's bad enough you've got one. Wait till she dumps you and then get back in deeper. So when they take this up to the destination where we can all see where it's going, we can all see where it could retest. And it could either happen where we retest and then we go up, or the sequence isn't too important, although, and look at this perfect top bottom on the 1 hour. Does it get any better than that? Whenever you see this setup where you trap these people in a 5-pip window, you pull it back to the starting gate, and the starting gate being, in a perfect sense, the double top at the round number. But you don't quite get there, and since it's a drift down, you can be putting in every hour it goes down you buy. Completely valid market order is kind of a, if you really think this is going up, you have a 25 pip stop on a market order to make 50, and you just, every hour that it goes down, you just keep pulling the buy button. It's really stupid. Then you also have the, I'm going to place my buy limit, Mr. Fancy Pants, right here, and not get involved until it gets down here. But it doesn't mean that, and this is, I say, diversification. When you hear people say you got to diversify, well, I would take that concept to every aspect of trading. Not only diversify your, time frames, different time frames, but you've got different entry technique, and you've got where you're buying. You are the guy that buys at the market like a goof because it's going up. I don't care where I get in, like this guy with the signal service. You just buy. You buy, worry about the stop later. You're not in big enough to blow up your account. Obviously. But you also, and of course this is the disciplined trader, the rule set. You say, well, I don't want to play outside the sandbox too much, or, everybody's made money with that wheelhouse. Why reinvent the wheel? And so you would say, well, I'm just going to go old-fashioned, wait till the market comes to me, because I can't bear the frustration of buying every hour, going, come on, people, let's go up. And besides the fact that you're actually losing a little bit on these, but if you've dedicated 24K a day to trade, the market's not going to go down. Well, actually, it has gone down every hour in a row. I've seen the yen go down for 20 hours in a row and never go up. Every hour, it's literally closing lower. And this is back when it just kept going down, like 5 years ago. And but this same thing on the going upside. This thing really went up. I mean, not at the end of the thing, but this went up like 5 hours clean up here. There are some kickbacks there on the 5-minute, I'm sure, and the 15, but this is quite a move up here. And another thing is, I just watched this Greystone guy do a whole thing on the Fibonacci. He lost money on some trade, and he said, well, I'm going to invert. What I should have done there is invert my Fibonacci, not just do retracement, but do extension inversions. Well, this is all hocus pocus in a way, just because that's not the problem. And he never described it. He went through this whole thing here. He never talked about, like, what I buy, what I sell, what I do here. All he was worried about was whether or not his Fibonacci tool was hilarious, because the Fibonacci, say 618, whatever, I could do a perfect Fibonacci here myself. Who can't see the beautiful, it's a third here, right? So the 618, right? 38.2 fib, 50%. Some people think that's fib. There's all sorts of percentages of movement in here. But really, how do you navigate this thing? And is it okay to take the money and run? Not from the people that subscribe to and this is all contradictory. There's so many contradictions. Let your profits run. Well, not if you're these flash moves. If that's your trade plan, that you're going to buy here and you're going to dump there in 40 seconds, and this is not what you call letting your profits run. You didn't have a chance to. This happened so fast. You don't really have a chance. Man, it's like maybe you have 1 minute, but unless this is all preset, where you have this trap set to grab this smashback, and even this one here, which is not a smashback. This is a drift down to the key, and then off. But these are 10 pip windows. If you've got a 15 to 20 pip stop on the CAD all day long, you're making money. Here you've got, say, your 10 pip stop. Top becomes bottom. You pull the trigger on the clock. You have sell stops here, volatility sell stop entries, and here maybe you did have a sell limit here. And you look at it and you're like, I'm not only am I getting filled on my sell limit, but damn it, I'm in front of my screen and I'm going to sell one at the market. And I've still got these sell stops here that are trend continuation, take me into the move. So there's 3 styles of entry there. And there's going to have to be a scalp built into that. So when you get to here, you're like kind of at break even financially. Not break even because you don't want to ever move your... well, some people, but I mean, what's the point, right? Why move your stops? If your targets are going to get hit, you're just going to you want to get cashed out. And you start tightening them up, then you're really saying, well, how tight do you run them? That's the problem there. As soon as you have a trailing trailing protection, how tight do you run it? Because here they would have kicked you out. So if this was your trade that you were just going to get in here and just, you have a day job and you're like, fuck it, let it go. If you started to tighten that stop up, it would have crushed your conclusion that if you bought here at the previous internal support from the other day, that you were like, we're taking out the high of the day. I mean, this is the question when I think anybody looks at the chart, they say, well, do you think we could take out yesterday's high, or do you think we could retest yesterday's low? I mean, those are definitely the windows of the cheapest entry opportunity at any of these things. Look at any 1 hour chart and only go back 3 days. It's like Taylor trading. Everybody's seen the Taylor method, where he's just like, well, it's going down like this. Yeah, because Taylor trading is like 3 days down by. And simple rules like that, I mean, it sounds so simple that people are like, no way would that work. But like, hey, every 5 hours it's down, I just buy one. It's crazy with the 20 pip stop, and I'm making money. Yeah, because how often does that happen? You're not buying into this with a 20 pip stop. They would have crushed you. And here you're chasing it, right? So if you buy every time it goes up at the market, bam. Every time it goes up at the market, bam, they're stopping me out. But you have to be buying into these downs. You cannot be with these. Man, I'm telling you, you could really make a lot of money if you just well, it's next week, right? So where's this thing going? Oh, I was going to copy this line over. So here's this. I got this highlighted. I'm going to just line it up here and also use that as my middle of the cycle kind of thing. So where does that go? Tumbling down. And this is kind of like, Mystic Gartley, but it's true that this middle of this cycle is right where this thing rolled over and went down. So that's the halfway mark back to the starting gate. Can't seem to get that to queue up there. And so if you copy this line and they use this as your channel rate of climb, and goes for the next known bottom that's prominent here, which has really got to be this bottom and this soft bottom girls. And so that's a big deal. And it becomes a big deal back here. This is your channel envelope. So I was talking about that pitchfork and the other one. If you make this wide, so you make like an envelope here, and of course you could probably make some Fibonacci argument, but I mean this really gets to be, even the word Fibonacci, a lot of syllables, a lot of work. I'm sure there's some correlation here where this is like, oh, but dude, this is the 62% of the. I'm like, well, okay, but you start to lose focus of how what the market's creating its own. You know, people got it a little backwards. They're trying to get a Fibonacci tool to fit on top of something that's already more high res than Fibonacci as far as the like it's self-healing. Like you ever seen these games? People play these computer games and they try to make people look like people, but they just look too perfect. They're not fucked up enough to look like people. And the market's fucked up. So this fib thing, trying to get that to fit on the chart. Every time I see somebody break that out, I just kind of cringe because I'm thinking, yeah, but no artist like, well, I don't know, maybe that's the goal of these gamers, to have these kind of fake-looking perfect people. Maybe they could like make them look more organic and real, where you go, holy shit, man, is this a game or a movie? Like, I always thought that was the goal. I mean, the very first games were just stick figures, you know. And anyways, so going back to this this channel thing. Now, if I wanted to really overtrade this, I would just, like people have like a 5 period, a 8 period, a 13, you know, 21 moving averages going. And I would drag this up to here and go, oh, well, I'm going to hang it off of here. Look at this. I got top bottom there, see? And I got this double bottom there. I'm getting in right there. And yeah, sure, because but that would be trading on the clock, right? You have to really kind of show up every hour and look, hey, am I back to here? Pull trigger. Hey, Jeb, pull trigger. And, oh, it's near my fib line. Pull trigger. Now, that's the whole thing. And you never hear them say that either. Well, what do you do with this fib tool? Well, every time you see it on that handle, just pull the fucking trigger, dude. Now, that's would be different. I'd be like, whew, finally, you know, because to do an analyzation of the market and not say, well, what do I do in this situation? And what do you do right now in this CAD, for God's sakes? Well, if you're long, you're probably still holding, looking for that follow through on Sunday, but it may not happen. Now, it really depends how long you want to be in a trade. And that'd be the question. How long do you want to be in these trades? Do you want to be in for 40 seconds or 40 hours? And if you're on the, if I zoom out one level here, you can kind of see where everybody's like, well, obviously when we get to this triple bottom where the bottom dropped out, a lot of people are going to get out, and people are going to sell there too, thinking, well, you know what, it's going to hell, and I'm going to get in here. This is quite a prominent bottom here, and this double bottom clean here on the 1 hour. This is not a half-hour chart. This is not a 5-minute chart. This is what the big boys trade, the 1 hour chart. That's what I'm talking about. So this is a big deal. And anyways, I just think I think that's kind of like, you know, it might take the whole day to get to this target. And you may be a bit that the first logjam is going to be this bottom here. So I would definitely be getting out of something there. And just share terms of, you know, if I'm long from here and I haven't got out of something along the way, I just consider myself completely lazy. Like if I got in here in this trap here where you just went a little bit lower that one day, and then okay, we rip up to here, people are bailing here. Now here's where the sellers come in. And this is where the trend people are like, yeah, see, I told you. This is, we're going to keep going down, but we don't. We log jam at the internal top. Now we're going to go, cut through the high of the day, pull back to the, here once again. Well, now we're just cleaning house. And if you look at the 5-minute chart during this phase, notice where the fight was. See this top? If you go 10 pips across, this is where the top becomes the bottom. Now this is the same saucer bottom you saw in the guppy. When you saw that guppy thing on the daily, I think did a guppy video a couple weeks ago or a week ago where you get the saucer bottom, but you really want to buy the bottom of the saucer. But you realize this is coming if you just hang in there for the, and it seems inconceivable after, and mind you, if you've swung trade this from a standpoint of really scaling in, you're actually, if you bought here, and you bought here, you bought all the way down. This is your first time you're actually like, you know what, I'm actually in profits. Now, say you bought here and here, and you're like, I can't even believe. So after the market kind of creeps out of that thing, it goes for this blast, and you're thinking, man, if I just had held through this, and I guess that's the amount of scaling in and out that makes it, what can you psychologically handle? Notice another thing, that the infamous 100 pip just completely sheared off round number, goofball number here is, this is the round number. Here's a double top battle at the round. We come back to it again, never come back into that. Take off. Now we're hell-bent on this area and this area, obviously. Question is did you just scalp that 10 pip pullback there and you're done for the day? Or are you buying, you're long from Friday hoping we get like a gap open, we get to here, you get out, and then are you a volatility trader waiting for it to quiet down and say, okay, well, if we drift back to this, we get in there. That's an obvious scenario. So you have like 8 scenarios. But if you really are going to just say every hour it's down, I'm going to buy. So you would have bought here, you would have bought here, you bought here and bought there. You didn't buy this because you're already in, or maybe you scalped to here, but you're still long on these, and then you buy here, and then nothing. You buy, you don't buy here, and then you buy really hard. Just, I mean, literally every hour it's down, and here you're not buying. Here you buy real heavy, and now you can't buy this big move, but maybe you cashed out this whole thing, and then you just, so really this, if you pulled the trigger 12 times a day, there's only 8 buy at the markets maybe per day. You're waiting for it to go down, and this is, I guess, presupposing you have an idea that you want that you can handle holding through that. This is, you're trading with a 100 pip stop apparently, or a 50 pip stop. But every time it drops 30 pips, you're like, I'm getting a discount, and if it goes up, I cash out of that and still hold on to my loser that hasn't been stopped out. But just saying that you're going to trade if you're going to trade a standard lot, so you can trade 100 1Ks. The question is, who has the energy to place 100 single orders manually? Like if you just kept on opening up your but if you're just going to drop a grid of 1Ks every 8 hours, and they just had a grid out here, right? And you're going to buy for the next 20K, you're going to buy every pip, for 200 pips down, you buy every 10 pip handle, and just let that thing fill. And now they're not going to stop you out, but you're going to be under the water. You're going to have to have the trend trading. But swing trading is like trend trading, where you're really, whereas the volatility breakout is kind of like scalper, get it done. Whereas if the market's plunging, that's, you're loading into that. That's going to be the swing trade, because you're like banking on the retracement, and the replacement of inventory that's going to come back to heal that plunge. Here was the big top. This is a baby top, become a bottom, the kickback just before this run up. So here's where we're at right now. And I'm sure a lot of people just got the hell out here. I mean, I certainly would have. I wasn't in here on this pair, but this would be a classic, you know what, I'm just getting out. And as soon as it goes choppy like this, another reason just get the hell out is that you're just locking up margin that's just going to sit there and annoy the shit out of you. If you're that kind of person that's annoyed by having you know, it's one thing to loan your car out to somebody and they just never take it, bring it back to you. And then it's another thing that you let them use their car and then within 3 days they smash it up. At least when they smash it up, you're like, you're off the hook psychologically because you're like, well, at least that, you know, I got stopped out of that. And if they just kind of like never come back, there's just no closure, you know. So that's the problem. If you're sitting in these things here, like you're like, oh, should I buy or should I sell? And some guy said it was going up, some guy said it was going down. And this torture here, I think I just had to get rid of that holding on to these. You know, I'd rather be blown to bits on the wrong side of this. And of course, here is the classic. Well, this is not quite the bottom become a double top here, but I'm sure on the half hour it's a perfect bottom to double top right at the round, amazingly, without any Fibonacci. And then really does make it down. And if you would have waited for those extra 10 pips, I think that was a little ridiculous. I would have rather just got the fuck out here. And, you know, maybe you could have sell that for a little baby bounce. But then they trapped you here, and this is the problem here, is the sideways action. Not too exciting and not really, you know, just better to take the money and run. So if you took the money and ran, took the money and ran, and then this stuff, this is still take the money and run stuff. This is a little bit tough if you're looking to make your 1,000 pips a week here on this. This is like 2 days of just nonsense up here, but look at this classic 5 pip trap. So having your orders on the edge of resistance with limit orders placed there. So now you got your buy limits down here, obviously. And maybe this top here. So this was the baby top here that you broke out here. And as it crushes through all these things, if you look at the, if you just put, if you put this, these rectangles and stack them inside the saucer down here, so you have this void here that needed to be filled, and you have this one here. So you see the there's this territory that hasn't been visited, and then there's also this very precise bottom here that becomes that bottom, and this is a pivot. This isn't that floor trader pivot crap. This is literally the 1 hour doji to doji sync here, where you're creating this big giant swing, almost completely symmetrical, minus that accumulation phase at the bottom that looks really choppy. You just get this perfect ball here, and this is like the ball within the ball. Now this is the crush down that everybody, this huge vacuum to me is just, when I see that I just think, man, but look how they kicked that back about 8 pips before they take that up. So here you have sell limits, obviously, all up in here, because you know what's going to happen when you get up there. That's going to be a big fight. They're going to cut it, rip it back. They might even rip it back to here. So they're continually returning to the scene of the breakout or the breakdown. So where this thing break down, it broke down right the apex of this triangle. So when they get it, when they pull it back up there, here you didn't quite make it to your entry. Like if you had sell limits here, no fill. And that's why if you are trading where you sell every hour it goes up, because you're like, well, we just went down like crazy, right? So I'm going to sell. Every hour it goes up, I'll sell. There's 3 sells here just by selling because it's up. And I guess you could have a robot that says, hey, look, we just, you know, I'm going to be a seller today. Every time it goes up, just sell at the market. I'm sure you get a robot to do that. I don't know. It seems like you can't get a robot to do shit, so I'm just going to do it. You know, there's 24 hours in a day. And here's the just before that collapse is that Another 1 hour perfect. Bottom becomes the top before the plunge, right there. Not a big plunge, but so dollar CAD. It's still going up. It's a little late in the game for the a little late to the party for the 200 pip move here. And these people definitely had a field day. The contrarians, they're buying it, but just before you go to the, I'm going to go to the 4-hour chart now, and just look where you're at in the landscape of things and just how inconsequential. Now, tell me this isn't like, it's almost like you don't want to look too far back. If you look at this perfect move here, where you go up about 200 pips, and you made that money in 2 days, and here you made about 200 pips on the downside, and you would have, if you were trendline breaking entry on that, if your trend line was like this, you see the trendline break, come back, attempt to revisit it, and if you drew this a little tighter, you almost touch that. So, and say you sold here and you sold every new high you're selling and every new low you're buying. This is a big secret. And so here's the double top. You sell, because you're going to swing trade this, right? You're going to accumulate here, and you're actually scalping along the way. And this thing finally breaks down all these pips, and you trade it in the other direction. Now, I don't know if you were using any type of trend analysis on that. Now, if you go to the 4-hour chart, in the context of just making these pips here, and the top bottom that you get here, now this would sync up. Not as many top bottoms here, though. But see, if your 4-hour is you're getting a perfect 4-hour, there's 2 major bottoms here. There's almost a third baby bottom here. Becomes that top. Here is your so you're going up 4 times in magnitude of that other time frame. So this 4-hour chart has a lot more. You just have to trade wider stops. But this top almost becomes a bottom here. Definitely this bottom that became this top before that plunge. It right at the exact pip within about, this is the wick is very baby here. So that whole saucer on the 1 hour is smoothed out here on the 4-hour. Here is the big come back and hunt down the all the protection stops people got in here before the big launching. Top becomes a bottom on the 4-hour. Top's supposed to become a bottom here, and this is where you get that. Well, everybody's counting on that, and they've got a trend line drawn here too. Well, it's not that they have a trend line. It's not like they're making that happen, but it's just kind of like nature's way of collapsing. I just lost my tree here. The wind came through here and just took off the tree because it was a weak move, I mean, the weak branch. This is like a weak extension here, and this is over cantilevered also, and there's also the vacuum forming underneath here. But if you just drew every pullback here, you would draw this double bottom becomes this top perfectly on the clock, on the 4-hour clock. So this is the rollover, and it's also a kind of a measured rollover where the middle of that node is the inflection point. Gotta let my computer catch up. I didn't know that the buffer on this was going to fill like once you go past about 30 minutes. But this being the middle of that cycle, it's almost nearly a perfect setup here, and then there's kind of another faint internal double bottom that becomes a top here also. So you have like a double convergence there of this balance point. It's like fair value at an angle. But this was the Bulls' big launching pad, and they had kind of a not so top bottom here. Kind of broke like this top bottom failed here, and we're kind of like slumping. And this launching pad here was this is definitely going to be the big hold that never held. But back here, the initial early sellers there, you're selling here because of this top and the fact it's meeting this, and then you can see that half a pip trap or 1 pip trap. Now to scalp to here, I would definitely have scalped to there because it's really fast money. And if it's really going down, it's not going to just go straight down. It's probably going to have to come back in some manner or form. And it does, and you almost get a perfect head and shoulders. Like, well, this being kind of the head here, I suppose, shoulder, kind of tilted. And then go to Plungeville. And the trend, I mean, trends are so short-lived. I think Forex has the most short-lived trends. I've never seen things just so spastic. So what's the trend right now? And here's a lot of people are going to sell right here. Oh, the big boys, I'm sorry. Right there. Those are the bottom came out, and this is right in the 1 hour at the bottom drop out there. And so if you zoom out one more layer from here and go to here, and now go, and then just think about all these moves in here. Now look how this is completely a unique move. Every next, the one thing you can count on, I almost say the thing with certainty, is that these markets never, what they say, the history doesn't repeat, but it rhymes. So this is this is a long move. This channel here is just incredible. And if you copy this over, so you want to get into the median of that, you can see all these perfect pivots on the median of that. Got to stretch that out a little bit, but I don't know if you can see all the baby tops, and here's the top become a bottom during this smash down. It's like, but it's in a different. It's the same story, but it's a different length movie. Like, it's a 2 hour movie compared to an hour and a half movie. Big difference there, because this whole thing of and of course the infamous round number without use of Fibonacci tricks is the big you fall through the floor. But the people that bought here, they got to get the fuck out at break even. That's why this happens here. And if you're following this as your pivot thread, or your moving average, every time you're coming into the cloud, this will be your cloud, this line here. So yeah, you're going to sell up into that cloud. Look at this correlation. And then this is the big kahuna sell. Come back to the round at the last known where everybody was hoping, and they had to ride it down for 100 pips of punishment. Almost got that perfect fill at the 100. So who's making money here? The people that are able to have the flexibility to go, I'm selling, I'm buying, I'm selling, I'm not, you're not selling. I'm short here for the ride down. I stop and reverse. I buy into that. I dump here, and you see you're actually a bull. You're a bull and a bear, and you're rooting for both teams. And here, big round entry. Hey, we're gonna get back here. I'm gonna get the hell out. And then here's your double bottom. Here's your limit order sitting here for your fill. This is unbelievable. 50 pip smash back into the top of here. Now on the 4 hour chart, you're going to wait 16 hours to get filled on that. But, that you know that going in, like even here next week, if you're waiting to get filled at this spot here, but you just wait for it. But here is the, this doji, and this doji gives you baby tops or dojis. They crush into here, you cash out. They re-crush into it, you cash out. It's stupid, easy. It's retarded. It does take the, you do have to put the orders in though. And even here, this trap into this window is amazing. It's like a 10 pip trap there. And then they just take it up because the scalpers got out here. Same story, different day. Now, you know, a lot of people are like, well, it's going up here. It may get up to that one day, but it also may go down to here. So you're always thinking like buying here and I'm going to dump here. I'm going to buy here next week for the trap and I'll start scaling out of that. Or I have buy limits here. You have sell limits here. Obviously, you're selling up here and you're buying down here. Now, how big do you trade that? And I'd say you got to scalp it, you got to swing it, you got to volatility breakout trade it. So you have your stop entry, which is, I'd say, even if it's a trend continuation, when the market quiets down, you implement your breakout strategies. You're either getting in at the market in a hedge or your buy stop entry, where just let it take you in, and because that's not really a plunge limit idea, like the idea that you're going to place buy limits every 100 pips here next week, and so when the market crushes in, okay, you bought one, you hold and you dump. Here for these two entries, that's the swing entry. This is a 4-hour chart, so this is like a monthly swing thing. But in the micro world of, you know, there's all this noise in here. Yeah, you could have a buy limit that buys 8 pips deep for, but you're living on a 15-minute chart. Let's hope, right? You're living off the tops and bottoms that occur on a 15-minute chart. So the little micro moves are, and if you're trading big enough, it's about the money in the end. It's not really about the pips, and so that's the big deal. Here, yeah, this is a big logjam area here, and it's no surprise that this bottom that became this double top that failed to be support for these bulls is the big controversy. Obviously, there's going to be a battle there. I don't think you can clean cut. This guy in the other video says, well, they're just going to take out all that garbage. You know, I get that, you know, it's frustrating to trade, but the markets don't always, and if it ever does take out, like when this goes down, it's a messy ride. And this is the undeniable. Now, here's another secret of trading I discovered. It was like Saturday morning. I woke up, and this is going to sound really dumb, but and I was kind of giggling, but I made a discovery that the markets, and I've heard this before, that the markets don't move in a straight line. But I think it's also true. I thought about it, and I thought to myself, geez, you know, and that's kind of the cool thing about is that they don't move in a straight line, which for the impatient person or the clean linear, like all projections you'll see on these markets look something like, well, we're going to come up here and then we're going down here. But it never looks like that. It's more of like this. Like it gets down there all right. Just like it gets up here all right. Or it gets down here okay. But on the way down here to, and then when it finally does get down here, look at this mess here. So I expect a mess up here, and you know that's going to be the challenge is picking which. Now, if you have a 1-hour chart and a 4-hour chart, and you're running those guys, and you realize that you're going to have to wait 16 hours for a setup or for a window of entry, or even now there is the trade where you just if you're a scalper, this was your trade, you just bought into this plunge and you're out by here, right? You're not worried about this big move up here, but you know that's going to be the challenge. Is it okay to just do this trade that works and stay away from these other trades. I guess that's what the cloud traders and all the Gartley traders are doing, is they're missing so many opportunities, but I guess they're keeping themselves from, I guess it fits their lifestyle. And I guess that's always nobody's ever going to agree on this stuff, only because people just aren't comfortable doing other people's style. But I think if you can see I can see what other people are doing. I mean, I just don't like to chase a market. Like if I think that, like right now in dollar CAD, if I wasn't on this long train, I'm like, you know what? I know we're gonna go choppy here. Let's just put in a couple buy limits here, a couple sell limits here, and wait till they fill me. And if on the it goes sideways and I'm babysitting this thing on the 1 hour chart or something, I'm like, okay, I'll move here and there, but this is tough. I mean, this is not a straight move up. This is not. It's just you really want it to be. And even when it comes down here, I'm envisioning a clean move off of here, but it's not going to be like that. It's going to come down here, and it may not even work out. It may just chop down and just be like, oh, it's just torture for expectations. So that's why I think you almost have to be a scalper to keep, so that it's a high probability trade, the scalp. The giant swing trade and the lofty goals of it's going to par and all these insane things, I think is just frustrating for me. And I'm sure for anybody that's got these outlandish targets in mind. Now look at the daily, and then I'll let you go back to your life as you formerly know it. But look at this thing. Does it have a trend? Can anybody tell me if this is going up or down? And look at all of the pips of go nowhere pips that are so many pips. Dollar CAD. Go to the weekly. For the love of Pete. Now, this is unbelievable. Look at this thing. Who is ready for this chop? If you had a trend bot, he is so, and if he was calibrated for these kind of moves, for this amount of velocity in one direction. So I say you built his robot's just cleaning up. He's like, woohoo, I mean, we are so rich, and then we just go into this. Or we go into this. Wow. Well, this is going to be very interesting because at some point here, we do know, and this is for the long-term outlook coming into the elections, it's certainly fascinating. And the market is just treading water here between CAD and US. We just tread here. And something's got to give on that. I think that we could backfill maybe to here. We could fall down into this top. Look how beautiful this top turned out to be, the entry. But I guess it is an uptrend in the long term. There's the monthly. And here is the the big saucer bottom here. So here's the trend line that's been broken. If you are a bear, you're like, it's over. Here's the trend line that's holding on the monthly, and you're about to test that. So dollar CAD, and here's the big kahuna pivot going back to the beginning of time here. There's this one right here. This monster. Double top becomes a bottom. So of course all the bulls targets are up here, $1.50. That'll be astounding. It'll be astounding. And yeah, well, let's see. I got any more zoom out here. Look at this double bottom up here. Sellers should come in up there. What an incredible. And these guys are neighbors. You know, not look at this right up to this top and closing price on the monthly. Just incredible. A lot of people started selling here as you came into this window. Now, on the 1 hour chart, it'd be a beautiful place to sell. Retested this, sell all the way up into that, have sell limits even up into the bottom of that, never got filled. Crazy, man. It's absolutely the most insane currency pair. And look at these. Here you're below par. You're literally, here's the, even where these countries agree on price is, where the hell is it? God. Yeah, it's like right down here somewhere. At $1. Yes, here you're at $1 right here. Right where this double top becomes a bottom. And this is just complete balance. There's only a river. There's only a couple little bodies of water separating these two countries. This is like a euro pound kind of trade. But look at that double top bottom. Then you dip in the window there for the big scalp up into this bottom double top. Here a big fight again, ricocheting off that, trapped underneath. Here's the auction. Trap them underneath, rip them up. Get them underneath. And there was the last trap before. And I told people that didn't trade Forex about this. This was the chart that anybody with half a brain. If you look at the monthly dollar Canadian, same thing with dollar New Zealand back in the day. It was trading at 50 cents, and you just, like, I remember seeing that the very first time I saw Forex. I said, you know what, 50 cents? I thought it was a stock. I said, let's buy. Look at that thing. So yeah, maybe 150 there, right? By the end of the world comes. 150. Dollar CAD. Absolutely insane, but it looks like it could be oof. It's just going to be choppy waters, I think. 80% chop.